Thank you for joining us today. And I'm going to be talking about how to track your Shopify store's financial health using some dashboards. So if you want to grow and scale your store, you have to know what your numbers are really actually saying to help you grow your store. So let's start with a verse that really speaks to the heart of what we're talking about today and the stewardship of your business. And it's know well the condition of your flocks and pay attention to your herds. And that's from Proverbs 27:23. So in business terms, what does this really mean? It really means you need to know your metrics, monitor your margins, and really protect your profits. So let's dive in and get started on what today's is about. Now, my name is Jacob Curtis. I'm a CPA, a certified profit professional, and a business coach. I started Curtis Accounting Solutions to remove the stress of doing the bookkeeping, payroll, taxes, and to provide some practical business advice that actually helps Shopify stores piece together that financial freedom. And I'd love to hear your thoughts and questions on today's episode. So please leave a comment below and remember to like, share, follow, and subscribe. So let's dive into the meat and potatoes of what's going on. A financial dashboard gives you a visual snapshot of your store's most important financial metrics. It brings together your sales, expenses, cash flow, and much more. So you can actually make those smart decisions that are based on real-time data and not just, I hope this is right, I hope that's wrong. So for example, imagine seeing your store's net profit, cash flow, and ad spend all in the morning, no digging, no guessing. It's right there on your dashboard. You can look at it and know exactly where you stand. Many store owners think that more sales equals more success, or more revenue equals more sales, more money, things like that. But that's only half the story. If your cost of goods, your shipping, and your ad spend is all really high, you can be losing money while your sales are going up. For example, if you made $100,000 in revenue, but your costs were $90,000, you only kept $10,000. That's just a 10% profit. Now that might be really, really good compared to where you are now, but let's say that jumps up to $200,000 and your costs jump up even more. You may still only be getting just a 10% profit or even less. Maybe you're still only getting $10K a month, right? You need to look at those and make sure those margins are scaling with you. You want to make sure and see these changes on your dashboard as fast as you can so you can have and make the changes necessary to reflect those updates and things like that in your business. So the first thing that we want to look at is actually your gross profit margin. Your gross profit margin tells you how much money is left after paying for the product itself. So for example, if you sell a product for $100, it costs you $60, your gross profit margin is 40%. Now this number matters because it sets the foundation for profit. A shrinking margin might mean rising costs in inventory or too much discounting, and your dashboard should be able to flag this and will be able to flag this as you watch those margins over time. The next one is the net profit margin. So net profit margin includes everything from cost of goods sold, ad spend, software, shipping, payroll, rent, everything, right? It's the bottom line. It's the percentage of net income over revenue, over total revenue. This is the real number that really tells you how much you're keeping in the business. So for example, if your store earns $200,000 and nets $30,000, your net profit is 15%, and that's pretty solid. If that's 5%, then you might have a problem. And your dashboard should be able to warn you as it tracks that net profit month after month after month. You'll be able to see that. Now, don't confuse cash with profit or profit with cash. Often we get those two confused. We think that if we have profit, we have cash in the bank. That's just not the case. You can still be profitable and run out of money if your customers pay late or you buy too much inventory or things like that. Profit does not equal cash. Now, you're going to use your dashboard to track how much cash you actually have. And using a profit first system will really expand that and give you a better idea of how much cash you have and for what purpose. And it'll tell you if you have enough to operate smoothly or not. So I recommend working towards having enough to survive at least 2 to 3 months worth of non-inventory expenses on hand as an emergency fund. Now, the next one we'll look at is your advertising. Advertising is a huge cost for a lot of stores. You need to know what each dollar of ad spend is actually returning. For example, if you spend $1,000 on ads and make $4,000 in sales, your return on marketing or return on investment or return on ad spend is 4 times, is 4x. Now that's pretty good. If that drops down to 1.5, you might want to look into that and be like, well, what's going on? Why did this drop down, right? And you want to deep dive into those and make some changes to improve that back up to the normal 4x that you're used to or whatever your normal is. And of course, you always want to try and improve these metrics over time to make sure that you can continue to improve these. Holding too much inventory also ties up cash. Now, too little and you miss out on sales. So inventory turnover is a really good metric to watch for. If it's too high, It means you're probably stocking out on things and you're missing out on sales. If it's too low, you've got too much cash tied up into inventory, which could cause some liquidation problems and liquidity problems. So your dashboard is going to show you how often you're turning over your inventory. And a good benchmark for fabric stores and others is probably 2 or 3 times a year. If you're in more of a craft, that might be higher, 4 or 5. And if you sell a lot of higher priced items, maybe like long arms, that may be even lower. It just kind of depends on where your store is. But the idea is to first figure out what it is for your store and monitor that over time so you can try to improve those margins and then inventory turnover as time goes along. So the next one is to figure out what your break-even sales is. Your dashboard should know how much you need to sell to break even each month. In other words, you need to know how much you need to sell to keep the lights on, keep the doors open without going under. If your fixed costs are $10,000 a month and your gross margin is 50%, that means your break-even sales are $20,000 a month. And that's just breaking even. If you want to go above that, you'll need to have more than $20,000 to make a profit. Now, financial dashboards should also include some basic marketing KPIs, more than just the return on the marketing. So, for example, if you have 1,000 visitors, we want to track that conversion rate. If you had 10,000 visitors at your store online and 2% of those are converting, which means you get about 200 orders, just a single improvement of up to 3%, that's an additional 100 orders. That's 300 orders at any given time. That's 50% more than you were expecting before, which should equate to about 50% more revenue with the exact same traffic. So tracking some of those traffic and conversion metrics also is going to help you to optimize and grow that revenue. You can build dashboards using tools that you already have. There's dashboards in Shopify, there's dashboards in QuickBooks, or you can invest in some specialized tools or even bring out your own and create them yourself. The thing here to remember is we don't want to wait for perfection. We need to get started and monitor at least 3 to 5, a few metrics every day. And you can build that out as you want to get more information. As you get comfortable understanding those, you want to be able to change those metrics and add more metrics and track the metrics you actually need to grow the business. You want to start simple and then you can add them on as you need as time goes along. So just like Proverbs 27:23 reminds us to know the condition of our flocks and our herds, you need to know the health of your store and your business. Dashboards give you that clarity and control so you can actually stop reacting and start leading with purpose. Tracking those metrics in growth and profit margins and inventory turnover are a great place to start with that dashboard. Adding in metrics for your marketing and others will help you to really grow your business and start leading instead of always reacting and putting out fires. So you want to grow on purpose, and that's really what's going to help you. So if you have any questions or need assistance with managing your store finances, setting up your dashboard or anything like that, please don't hesitate to reach out. I'm going to help you guys piece together financial freedom. You can schedule a call with me by scanning the QR code on the screen now, or go to the URL posted there, or click on the link in the first pinned comment below. And remember to follow me, Jacob Curtis, CPA, and Curtis Accounting Solutions on Facebook, Instagram, Pinterest, and YouTube. Thanks so much for watching, and we will talk to you all later.